Hey guys, it's Will. Hopefully you're having a great day today. So it is getting ready for the markets time as it's Sunday night here. We're getting ready to see the markets open tomorrow morning, and we're here for our Sunday stock talk. So this is when we prepare for the upcoming week and look at the top data center companies. We're going to look at the remaining two from the top three that we went over today. We're going to go over the top AI companies. What else? Oh, right. Whatever you comment in the chat. So let's see it. What is everybody commenting today? Do we have some comments over in the chat maybe here for what could be some ticker symbols? Go ahead, drop them in the chat, and that will make it easy for us to jump right into the analysis today. How's everybody doing here on Sunday? We just wrapped up. I was with some family. We're doing some Scrabble, and get ready. Now we're back here. So, how's everybody doing? Ned, what's going on? You got BBAI, LAES. Okay, we'll take a look at those ticker symbols. Crazy Carl says, "Hey, sorry I missed your call. I was working today." That's right. We call all of our Stockmate members. This is the t-shirt that I'm wearing here that we also send a free t-shirt to every Stockmate. That's where our daily live trading is. If you guys ever want to tune in, again, it's the second link below. We'll be there tomorrow morning at market open, and we are there Monday through Friday. Kai, what's going on? Hope everyone's having a good one. Okay, so I see Vaughn. Where are you guys tuning in from? Awesome. See some people. All right. Cool. All right. So let's get into it. So a couple things to go over today. We covered the top three data center stocks earlier this week. And today, we're going to dive into the next two on the watch list. And this is our Sunday stock talk. So we're getting ready for a big market open tomorrow. The systems right now, what we see are kind of flashing green. See some green in the markets. And if you ever want to trade live with us, again, it's the second link down below to join Stockmate, our daily live trading sessions. So let's jump into it. There's some good ticker symbols I see. The first thing I wanted to go over, though, if you missed it, we went over the top 5 data center companies today. In that video, we went over, I think it was APLD was one of our top picks. We went over BITF, and it was TSSI. Okay. Now, we're also going to go over, so we kind of went over those, but we're also going to go over some other ones for this week. And I actually wanted to start it off with the other one, IREN. This is a data center company that has been getting some momentum recently, basically doubling in price. We saw it go from $14 up to $30, and then back from $40 up to $74. We did identify the fair value as far as balance sheet to be back around that $42 range. But as we know, the data center markets are holding momentum. So couple things I want to do. First, I actually want to search this stock up, IREN, over on the machine. Let's start getting an analysis together. As you can see, it's up 5% pre-market. And we do have, while it might be a little bit overvalued from a financial perspective, the data center market is carrying AI. Now, a lot of people say AI is a bubble. AI is not a bubble if the value is being provided to the marketplace, which is really what we've been seeing. Real world value is happening. So you can see IREN bounced after a big correction. Most stocks had a correction last week. We see most stocks actually bounce and find some support and continue up so far. So they've had a nice bounce towards the end of the week, and actually all the way down to $54. They've recovered about 17% since Friday. And so they're potentially looking to continue if we see the bull trend continue in the data center markets today or tomorrow. We'll be watching tomorrow morning, and this is a 16% potential recovery. Now, IREN, we can pull them up here. They are not really coming out with any major positive news catalysts. In fact, they've been raising a good amount of money. They did double their AI cloud to 23,000 GPUs, though. That was infrastructure plays there. And then when we were looking at IREN from a financial perspective, we saw that their market cap got up to 16 billion. Now, they're increasing their revenue drastically. So that's why I'm saying while they're trading at a premium, there's and maybe truly a financial fair value is down here. We're still looking at this revenue hype getting up to 180 million in the last quarter. Revenues are up 200%, net income's up 400%, and their assets are up to 3 billion. So if they're on track to do, let's say, 600 million or 700 million dollars a year, and they're doing already, they have about 3 billion dollars, that means that they're now potentially looking at what would be five up from that, probably around a 17 to 20 billion dollar market cap would be a projection of fair value. So that would mean that they would continue up. We'd probably see them make this run back up into the $73, $74 range, so long as the data center demand continues to increase in that market. So that's the data center company, the first one I want to talk about. The second one is, and we talked about this in Stockmate a little bit this past few weeks, and you can check the conversations in Stockmate. We've had some good stuff going on. We were just talking TSSI. You could see Lance literally 48 minutes ago talking BITF for Monday. So we are talking about that. Also see some testimonials this past week. David came in with 200% gain on the portfolio. A little bit unrelated, but hey, oh, didn't mean to pull up myself here. There we go. So as you can see, IREN has a downtrend of about 1.5% over the next day. 3 months, though, looking bullish. We look at the next 6 months, it's looking bullish. So could we see towards the end of this week a recovery and continuation? That's what it's kind of looking like right now, according to Grok, with all the data that we source along with it. Now, that's how IREN has gained a lot of momentum. It's from the data centers. The other companies that are building data centers, and this company recently signed a deal with Google, is Wolfstock. WULF is the ticker symbol. You know, you see tech all around you. You're probably holding a phone, like an iPhone. You might have been using ChatGPT, or maybe you're using the machine, like this analysis tool that I'm showing you right here. It all uses AI. Maybe you're writing emails. Some people are writing emails with AI. Well, however you're working, you know, there is a lot of ways that you're going to be working with AI. And the reality is when we look at the trend with Wolfstock, they're also providing infrastructure for the data center market. And so they've continued to bounce here. You see them up about 4% after hours, continuing this trend. So we're going to see, hey, maybe they continue that uptrend up into that $17 range. If so, continuing this uptrend as it stands, we're going to watch it market open, see if they pull back. Because sometimes what happens, this is the phases of the market: accumulation followed by some manipulation and then distribution. So when we're looking at market open tomorrow, as the market opens, you know, watch that drive up in price right now up to market open. We're going to watch very closely, see if we can get a pullback even at market open, and then look for some opportunities. That's oftentimes what happens. Now, when it comes to the longer term play, though, on data centers, not really looking for those shorter term entries, we're talking about revenues that are up to, let's see, market cap's up to 5.7 billion. Revenues are up to around 150 million and increasing. That's year over year change of 100%. So Wolfstock increasing revenue over 150 million and total assets near $1 billion right now. So they're in the market of data centers, just like APLD. And I wanted to cover them very quickly as we talked about some of the data centers, the big investments from big tech right now in data centers. But really the real demand, the use right now is huge. So that's how it looks there with Wolfstock. We see that with APLD as well, as they've signed some billion-dollar deals. Now, what other ticker symbols do we got here, and how is everybody doing here? Kai, what's going on? Bravo. Hey, what's up, Bravo? We got Kai says, hope you're having a good one. Having a great one, man. Vaughn says LAES and Rich Tech Robotics. Those are some interesting ones. You got a quantum company of LAES trading way above what it's probably currently worth. And then you got, but a future of quantum. And then you have Rich Tech Robotics, kind of same deal, trading way above where it's at, but a future of robotics. It's just part of their market right now. We can go into them deeper. Are you bullish? Are you bearish? What are you looking for there? Southwest, here in time. You're here in time. Let's see. Do you think LAES is a good buy? Personally, I think it's overvalued, as I just mentioned. But as far as investments in quantum, there's more capital moving there. Is it providing value to the marketplace? We are still awaiting. In fact, there could be some great value to the marketplace from quantum. It's just been a little bit slower in its development, and the verification of that does take some time, because you see partnerships come up. Like a good example is like QBTS partners with MasterCard. Everybody's getting really excited. D-Wave partners with MasterCard. But what happened? You didn't see anything on that, and it kind of fizzled out. They're partnered with Ford Odyssey. You maybe see a demo here at that conference we went to. And I just briefly stated, you're making a lot of great partnerships. Keep up the great work, when I was able to talk to the CEO of QBTS. And D-Wave is getting partnerships, but are they continuing to build on them? And that's kind of what we look for. And that's why I say, real world usage is kind of like the key in almost any market. So I don't really see that quite yet in LAS. I see the money kind of flowing in here and there, but it's still, you could follow the money, but follow the usage or the value to the market. It's probably going to be sometimes even better. So yeah, definitely we'll do some more research on it, but I don't really invest in it personally. All right, Bravo says, what's your take on eVTOL companies? I think they're good companies as far as where that's going in the future, but I do think that they're not necessarily solving a huge problem in the market right now. Is it a need right now for eVTOLs? Is it a need that people are like, I have to have an eVTOL so I can travel, or are they having okay time traveling the way that they are traveling? It's not that it's not going to probably be a market that's bigger and bigger in the future, but maybe the demand from just businesses and humans in general might not be eVTOLs right now. Personally, it's kind of how I see it. But also you see military grade tech. That's a different story. Annette, good evening, Annette. How are you doing? How's the machine going? Have you been able to tune that thing on this past weekend? I saw some usage spiking. I don't know how much I'm able to show, because I don't want to reveal any like sensitive information. But I was looking at, I don't know if I could do this. Hopefully I did not see any emails flash. Okay, thank God. But as you can see, we did, like, this is like a weekly look just into October. Did you know we're on track to do just Grok alone over 15,000 usages just on Grok alone? We just turned this tracking on, literally, and we're getting thousands of requests a week, and that's just on Grok. I have some other tracking things that are rolling out, which I could kind of show you guys. You don't have access to this if you're using the machine, but I could see all the usage and how people are kind of using it, and I can see this just today, how we're using it, and I could tell you that the usage is going up for sure. There's been some really interesting stuff on the machine. So anyway, Annette, if you haven't had a chance, go let me know how that's kind of going with the machine. Hopefully you're doing well. Black Cat, PRVA, we could take a look. Logan, what's going on? Okay, Vaughn. All right, so APLD, we just did a little bit of a look at it, but really APLD is a data center company that we did a big breakdown on yesterday, and we invest in that data center company. Data centers are really a key factor right now in the infrastructure. And so for AI, I can't tell you how many people are saying it's a bubble and like, watch out, it's a bubble. And the reality is like, I think that you have to measure by real world value, and this is different. There are people that don't, for example, have a job because the AI can do their job. How many of you guys have heard of that? Anybody heard of that? I would say that's like front and center, pretty clear um, indication that the AIs are valuable, because it basically means like somebody that was getting paid 50,000 a year or $100,000 a year, the AI is that valuable per year, right? So there, that's something. So there is like this conversation I keep hearing about. People are like, oh, I'm not even gonna bring it up anymore, but I keep hearing the word bubble, and I'm like, you have to look at the value. Like it's definitely more value from companies. All right, so Elvis is here. You got Freddie and Captain says CLSK. We can take a look there. Eddie Lopez Will saw the Robinhood Legend ad. Very cool. Congrats. Hey, cool, man. Yeah, good partnership there. Just actually was filming out in LAX with them. So I appreciate the comment, Eddie. Thanks. Um, there's actually a lot more coming, and I was able to learn how they do some stuff, which we're doing in our company now, which is really cool as well. Freddie Lunar, no, we could take a look. Thanks, Freddie, for tuning in. Happy Melfi, thanks for tuning in there. Leonardo Vargas, what's going on, my dude? QBTS still a buy? It depends. Are you short term or long term? Southwest Baltimore CQ says, what about VRT? All right, what about it? Are you bullish? Are you bearish? Let me know. Gene Burns says, hey, Will. Hey, what's going on, Gene? Savor the skies. What about Rich Tech Robotics? What about it? It really does help. Like, I'm happy to take a look here. We can jump in. But, one thing to consider is like, let me know what it is you're looking at when you're looking at a stock. So JZeb says, hey, Will, any word on KSCP? I mean, there could be any word. In fact, JZeb, there's some word from you right there. It says any word on KSCP. You see what I mean? So like, let me know, what's your plan? Are you guys, when you're looking at a stock, the most valuable thing that you can do is to differentiate between, for example, is it a short-term investment or is it a long-term investment? Is it more of like a trade or is it a long-term investment? Of course, for context, is it bullish or is it bearish? Is it something you would hold for 5 years, something you'd hold for 10 years, or never sell? Or is it something you're kind of looking for a swing trade, something shorter term? Those types of things, definitely like that type of context can usually like speed up the ability for you to get clarity on your investment. So hopefully that's helpful. Michael, and also it helps me to be able to analyze it for you. Michael says, I would like to see Bitcoin top dip once more to load up more DLT to have millions after the run. All right, Michael, let's go, man. Marty, didn't miss it. Going on. Happy Melfi AMTM. That company has really good cash flows. That company is doing well. Save the skies. I'm bullish on Rich Tech Robotics. All right. Rich Tech Robotics, probably the most requested that I've seen here. Now, I did see Freddie with Lunar. I saw some other ones, QBTS. But let's jump into Rich Tech Robotics real quick. And one thing to consider, almost always like good investments or good investors in general are early to investments and they end up getting discouraged. How many of you guys have been there? You found a good investment, you know it's really good, you buy it, and then it goes down over a couple of weeks, couple of months, maybe even a year or so, and you're like, I'm done, I'm just going to get out of it. And then you hear about it a year later, 2 years, and it's just way higher, and you're like, what happened? That's something that happens. It's if you're thinking about it, there's something there usually. It doesn't always mean it's bad, but if we're not going over it a lot. But let me jump into it and let me kind of break down why I'm telling you that, because ultimately as an investor, there is a fine line between that happening to you and then also not bag holding things that are literally no longer valuable, and being able to differentiate. This is what happens when I say you're early. I mean, robotics is kind of the second phase of the AI boom. And I think this is kind of how the AI boom is, right? The AI boom is based on first the infrastructure and the software and the data. Okay, that's going to be like the chat GPTs, the LLMs, the data center companies, the semiconductors, the infrastructure. Then the second wave, I think, is going to be the robotics. Robotics is going to be most likely the second wave. And then the third wave of AI is probably most likely, and this is again down the road, and you can kind of like literally look at Elon's thinking, like he's doing like software and like building XAI, and then he's also doing Optimus. And then what's like the other thing, like way down the road? It's like human integration with Neuralink. So I think that would probably be like the third like major phase of AI. So if you're thinking that big about it, kind of makes you realize like we're still in the first phase of like software and AI. And a lot of robotics companies, it's easy to be way too early on them. And I mean so early that like this stock could take years before it materializes, at least like just simply looking at their revenue, which I know it's like you're excited. People tell me I'm really excited about this like robotics company. And it's like, this is going to be huge. Robotics, I get it. But at the same time, realize that the measurements of the value that they're bringing to the marketplace is going to be how much money they make usually. And so when you look at a company like Rich Tech Robotics, they are not generating revenue. You can see the revenue, it's maybe 1 million or $1.2 million a quarter. So these are not big numbers, right? For almost $1 billion market cap. Okay, so 874, that's how much people have invested, 874 million, and they're losing about $4 million per quarter. So they're losing money. Not a red flag, but definitely like, hey, we're talking about like the measurement of value to the marketplace. So far, people aren't obviously really buying the robotic stuff, right? I mean, or else they would have more money, right? Can we all agree? Like they would have more money if they were contributing more to the market or the market was really buying their stuff. Let's all agree. Now, if that's the case, net income is negative. The balance sheet is okay. Their balance sheet, though, so a measurement of how much money a company has is kind of a vote for how well they're going to, or how well investors think they're going to do in the future. So $100 million in assets under their management right now. They got about 1 million in liabilities, 107 million in assets. They have some capital. They, based on their running right now, could run for another 3-4 years right now and not make money and continue to lose money and still be okay. So that's good. It means they've had investors that invest in their company, and most likely those investors are expecting a positive return. Otherwise, there wouldn't be that total asset amount of 107 million. So 107 million, they're losing money each quarter. The market cap's still pretty high at 874. Basically, what we're riding right now is we're riding kind of this sentiment around robotics and not necessarily a demonstration that they're providing value. So clearly, they don't make much money, but they are going up in stock price because investors believe they're going to be worth more. So that's not a good place to always be. They did recently kind of break pattern, not completely. They pulled back. Now, if we're going to see a continuation of robotics and they somehow continue this bullish uptrend, we're looking at something like this, that continuation. That's an upside of about 20 to 40% potential for Rich Tech Robotics. Now, when we look at, again, they're losing money, and then you look at their value to the market, I see this and I'm like, okay, I see some robots. They got some robots here. They have a partnership there, which we've identified is not something that I would I would not. I think this is a red flag because I did this Connect program in 10 minutes, but they have it as their main marketing on their site. That to me was a red flag. Now, when we look at the robotics, they look cool, they look nice. Delivery, cleaning, they're in a lot of different industries, and they're also doing 3D representations of their robots that most likely maybe they've been made. We've seen that one has been made, but some of them have not been made and are 3D representations, which are kind of a red flag. Now, they say we have patents. That's also kind of a red flag to me. I mean, if you look at Elon's companies, like we don't patent anything. If you want to try and catch up with us, you can go ahead, use the same patents. In fact, they're good for the world. So it'll make you a better car company, which is net positive for society. When companies put a lot of emphasis on we have patents, it's not bad. It's not like this bad thing, but it is definitely something to say, okay, like just because it's patented, does that mean that it's a good deal? Does that mean that they are doing something special? Because I get to go do something not that special and patent it and then say it's patented. And I can't even say the word, but you get what I'm saying. So anyway, we've looked at some of their technology, we've looked at their robotics, and personally, just looking at the investor side, I just haven't seen it. I see them talking about the market. There's a 4 million sales agreement here. Maybe that can grow some of the revenue. Okay. There's an agreement to accelerate design of next gen AI powered service robotics. Maybe they can continue. But again, when we're looking at the current revenues and things like that, they do look overvalued. So that's why I don't personally have any holdings there in Rich Tech. But I know a lot of people cover them, and I get it. I'm just saying, like, there's been some things that ideally measuring how much value they're bringing to the market, it's really not all that great right now, but could be in the future. So you're betting on the future, and it's very high risk because they're $700 million market cap. They could drop to 400 million pretty quickly. That would put them around a $3 a share. That's a 41% drawdown. So just keep that in mind with Rich Tech. It's almost a little bit hard to keep up on Rich Tech because the robotics market does move fast, so we could see more optimism. But like I said, I think we're still far away. Like robotics are going to be the next wave of AI, but when that happens, then we're going to see the markets probably rocket in robotics. And that's just kind of my theory around robotics. I think we're not there yet, quite yet, but we will be in the future. And we just have to kind of patiently wait as we're still in the infrastructure side, the data center companies we went over. So what else do we got here? Super J, what's going on, Super J? Good to see you, man. New main says Open and Alab. How is Open stock doing? That's an interesting one. Someone says there's a lot of short interest, 70% short interest on Rich Tech Robotics. Yeah, that's kind of a worry. I wouldn't, like, if I was thinking about companies that were potentially companies I would short, honestly, Rich Tech Robotics could be on that list. They're not as much as the other stock that everybody tells me about. It's called RZLV. I guess there's very large amounts of people covering this stock on like YouTube and on TikTok or what have you. And they're saying this is the next AI company, like get in now before it's too late. This company is $1.5 billion market cap, and they only have 26 employees. The income statements indicate they're losing $28 million a quarter. So their net income's down 350%. But to top it off, they have more liabilities than assets. They got 94 million liabilities. So do you see, like, they literally could be bankrupt at any moment, except for some reason they're getting hyped up. And I guess there's a class action that just came out like 14 hours ago. That's funny because I've been saying that, like, it does not make any sense that this company's getting hyped up. And I'm not a company that talks down on companies at all. I'm just saying, again, the value of the marketplace, they're obviously just losing money. They're taking out loans and they aren't able to pay them back. So that's what's going on there. So when it comes to Jim Jam tuned in here, what's up, Jim Jam? GPUs as a data center play, multiple streams of income under $1. Um, yeah, I mean GPUs as far as like buying GPUs in order to rent them out. Is that what you're saying? Or are you talking about data center companies to buy? That because I personally believe in that. In fact, um, I was just literally talking with my developer about this, Ryan, and we are literally buying potential racks here for building our own kind of like super micro mini data center. And we're doing it for our own company so that we can make, let's see, what's one of the ticker symbols? Open stock. Let's go ahead and search it up. Let me log in here on the machine. And so like in the machine, for example, so this is our AI analysis, and you can search any stock in the world and have the best AI models in the world paired with the highest quality data that we source, so it can be real time for any of these models. And I search, let's say like what was the stock? Open stock. And right now, the average time that it takes to get the analysis, for it to look at all of the real-time data that we give it, for it to look at the press releases, the financials, to look at the news, and then tie that relativity to the projections for timeframes, and do it relatively. Like the next week has to be the next week. The articles that impact the next week are going to be different articles that are considered for the next 6 months. For this right here, this projection here, it took 20 seconds. I had to talk, and then it gave us a projection, right? 15 seconds. If we have our own GPUs and setup from our team here at our company, we could actually have this AI. Not only could we give it even more data, whether it's Grok or Claude or what have you, or Gemini, but we could also get it generated within like 2 seconds. And so, yeah, like definitely like owning GPUs and things like that, super valuable for companies, for your own company, but for other companies, so you can rent them out. And who was looking for Open Door? It was New Main. What's going on, New Main? So here's the projections based on Grok. It's actually fairly bearish here over the next day, but over the next 4 hours, maybe it's looking for a spike here at market open on Open Door. Next month is bullish though. Next 3 months potentially bearish, and then 6 months it's bullish. I have to look at the chart and really see what it's kind of considering. Let's see, Open. I know this company has really good cash flows. They kind of do wholesales. So it's kind of, let's see, it's anticipating a pullback down to probably like this level. Could be this previous resistance level. It's anticipating a pullback. This is like Grok, basically. It's anticipating a pullback here, and then it's going to be in the next 6 months back to 750 around here. It's basically anticipating something like this. So when it comes to the upside for Open, they have a lot of liabilities, which is surprising. Not too surprising, because most real estate companies do. It's like wanting me to search OpenAI, because that's what we search all the time, but I'm trying to search Open Stock or Open Door. So Open Door, $5.3 billion market cap. You can see that they're bringing in revenues of about 1.5 billion in the last quarter. But this is what's weird. The operating expenses are so high that they didn't make any money. In fact, they lost money quarter over quarter. So it wouldn't be that worrying to see that happen. But the thing that's kind of worrying is that you could see their equity. And so their equity is actually only at 631 million. So when you look at some of these quarters where they lose, let's say 100 million, I mean, if they do that, if they did that with their current balance sheet, which is declining over the last 4 quarters, 5 quarters, you can see their assets are declining over the last 4 quarters. Now, I think even annually, you can see it's been declining here. Now, the issue is let's say they have $100 million loss in a quarter, like they did have towards the end of 2024, and then they lost 85 million in quarter one there, 2025. That $100 million loss potential, it's kind of amplified because their total equity, while they have 3 billion in assets, they only have about 630 million in equity because their total liabilities are so high. And so as a real estate company, they might be doing deals and things like that, but they have a pretty high overhead. I don't know if that means they're not just doing wholesale on the deals. You might have seen the ads on TV where they tell you to essentially like scan the code, and then we'll give you an offer on your house to buy your house. And so they do that on a wholesale. I don't know if they do wholesale because they might actually buy it and then sell it. And so they hold higher amounts of liability because they got more loans and things like that. So as far as like their actual risk, it's pretty high. It means they could potentially go out of business in like 5 to 6 quarters because their equity is pretty low. And if they have some of those negative net income quarters, they actually don't have a lot of cushion. I know it looks really good. Wow, this is probably why there's so much hype around the stock. The revenue's at $1 billion a quarter, guys. $1 billion. Like, yeah, they lost some millions, but hey, it's $1 billion. It looks really good. But I'll tell you, like, when you look at the equity, really narrow, and then you have the negative net income can kick in there with like a couple quarters around 100 million negative. That's not good. That could definitely be not good for Opendoor. And so, they've been on a bullish run. I know that they've spiked up to $11. I'm just fairly, I guess, conservative on the company. I wouldn't personally buy it. In fact, if I was really interested in them, I would, rather than spend $2,000, or I say that because that's how much it would literally cost to kind of do what they do. Rather than invest in their stock, I would spend $2,000 and send out a bunch of mail to my target market of homes I want to buy that says, you wouldn't consider selling this home, would you? And then it's like, picture me with like scan the QR code or text or call now to get an offer cash and get your home sold in 30 days, and then send it to probably like vacant landlords or distressed home sellers that would most likely want to sell, and then just wait for the phone calls, and then, basically get the phone calls, either actually buy the houses or get them under contract and then market them and sell them for a higher deal. Like, I know that it's like you want to buy a stock, but it's kind of like that same deal too. Like when I think of Bitcoin companies, they have so much Bitcoin. It's like, if you want to own Bitcoin, don't buy an asset that's not directly tied to it. Like, it's almost better to just go buy Bitcoin for yourself rather than rely on another company. And so, I don't know. That's just something to consider. Some people don't have the skill to go do a wholesale deal, but like literally you could go learn what they actually do for their business in like a day. It's like, it's not that hard. We could do a YouTube video. Should we do a wholesale YouTube video? Like, there's a ton of people that do that online, and I've done it before personally. It works. So anyway, kind of off topic, but that's kind of the consensus with Opendoor. I wouldn't personally buy them, but they are expected to recover after a sell down there. What else do we got going on? Vacuum robots for Marty. Interesting, Marty. I'm not sure, man. I'm not sure about vacuum robots. Potentially could be, I guess, valuable. You got to think about it. It's like, would you want to do vacuum robots, or would you want to do a different type of robot? Because vacuum robots, like somebody that's vacuuming a casino, they probably get paid like 15 or 20 bucks an hour. Maybe. I don't really, I guess it depends on what state you're in. But like most casino people that would be vacuuming the casino, probably not making that much money. So I guess it would be like, if they're making robots to replace that task, is it actually something that a company would spend a ton of money to buy a robot, is the margin actually there? Is it replacing a task that's high value? I think they should focus on extremely high value tasks for their robotics. Like I think, for example, like the robotics that do the rebar on foundations for homes. I was just doing a foundation for a real estate thing we got going on, and I like I'm working with a guy, paying him to do it, and I was like, yeah, it's expensive, or it takes a lot of time. So anyway, in general, for the upcoming market, we're going to be watching some robotics stocks. We're going to be watching some data center companies, and primarily looking at the companies that are building the infrastructure for AI. James Neal says GPUs, DVLT. DVLT, got it. Okay, well, that's Data Vault. I think that's over on our data center watch list. There it is. And that's one we've been watching too. They're up 12% over the last few days. They've been volatile, but they have this uptrend, very consistent uptrend over the last few months. So Data Vault, DVLT, is kind of on a consistent uptrend, and they're around $2 a share. Now, when we look at their approach, a couple things to consider. They aren't making money yet. They're still losing money, 37 million, and their balance sheet is up to 120 million, which is good, but they haven't had a positive net income basically. And so when you wonder why is that? Well, if we go to their site, we take a look at their company, they do data perception, pricing, secure monetization, Data Vault platform. They have a platform. It looks kind of like, why? What are they doing? I could scroll through here, but I kind of feel like weird. I don't know if I'm like getting, I don't feel like it's kind of weird, their website, and it's like, I don't know. I don't even know if they're like, is this company, that's the one that's power blockchain, Web3, high performance computing. Everything about it just feels kind of strange. I don't know, like kind of red flaggy. Why? Do you get what I mean? Does anybody get what I mean? When you see like a bunch of, they say, here's all the industries that we're in. We're in like a million industries, and we're doing data science. And then I'm like, okay, wow, they're in like 20 industries. That's crazy. And then you look at their employees, and they have 65 employees. I'm like, huh, that doesn't make sense. Like, how are they in so many industries if they only have 65 employees? So I think they're kind of red flaggy. In fact, I don't really even want them on our watch list. But I have seen them surge. They are on this consistent uptrend, but they're very high risk. So I just be careful. Yeah, it looks like AI created their website, right? It's funny. So I'm just gonna remove them, honestly. But we could get, if something changes, we'll bring them up again for sure. Just need to have integrity around like what we're looking at. James says, I need that speed for Mercatus. Yeah, man, we're working on it. I think we'll have that very, very good for you, man. Mark says, Trail stopped out of QBTS and Rigetti after a long, good run of returns last week. Trying to figure out good reentries for one of the two. Yeah, personally, I hold long term on those companies, and then we trade them on this massive run we've seen recently. It's funny, while they all pulled back, they're still kind of in pattern, actually. You can look at QBTS, it pulled back massively last week, still in its uptrend. Same thing with Rigetti in the quantum market. It pulled back pretty massively. Honestly, it's still kind of in its overall uptrend. And same thing with IonQ. So just kind of considering that in the shorter term, might not be as bearish as we expect. But once it breaks pattern truly, yeah, short term is not looking good for quantum, because there's premiums that they've been trading at recently. And that's part of the market trading ahead of where it's at right now and where it's going to be, positioning for where it's going to be in the future. So that's just where it's at. Short term, though, we will be watching for opportunities. As I mentioned, it is in this uptrend. We see a lot of quantum computing companies in the uptrend. And while it was scary when the market pulled back last week for some, for us, we got excited. As you guys know, I'm like, I have popcorn when things go red. I'm excited. But when it pulled back, a lot of, oh, is it going to go down? But you see it hold the overall uptrend. Didn't we see that? So what does that tell us? What does that mean right now? I think it means there's a good possibility that if the integrity stays with the trend, we could see a continuation, which is absolutely crazy to think about because they're at their current levels that they're at. But if we do see a break-in pattern, though, I want to watch closely. A lot of the break-in patterns, like on Rigetti, we're seeing around that $40 range. QBTS break-in pattern would probably be down around below $35 a share. But they've bounced very well in holding the levels that they're at right now. And that's kind of what we're watching here, is that potential continuation. So we're going to be watching them closely on the short term. And Jim Jam, thanks for tuning in. What else do we got going on here? Awesome. Annette says, I'm using the machine a lot in prep for tomorrow morning. I love it. We are working on the pre-market data. So right now, I think it's considering, for those of you guys not familiar, we do visualization of the markets and then also projections of the markets. And if I'm not mistaken, the data to where it goes is we go till after hours, and then there's some pre-market data that we consider. And I say I'm not mistaken because I got to talk with Ryan, our developer, because we just recently added some new real-time data. We went to Yahoo APIs and we're like, it's not fast enough. We need more real time. So we ended up going with the same provider that's the provider for Robinhood for some of the real-time data on the prices. And so I got to talk with him, see actually like to what extent the pre-market and after hours data is rolling in. As far as I know, we have we're considering news, we're considering like SEC data or press releases, things like that. That's 24/7. But I got to look at the actual price quotes, because if we look at AMD, it says 20. This is a little I don't want to problem solve here on the stream, but I am curious here. AMD. What was the current quote? 23308. Last quoted here on AMD. 23690. Okay. Yeah, so it's got the last quoted price. So we're gonna anyway. It will be it's I know it's within a second when the market opens. But as of 24-hour trading in the Sunday, I don't know if it's fully linked there for that. So anyway, I tell you that because the best projections will be primarily during market hours. In fact, I was just looking at how people are using this thing, and it seems like, it's kind of hard to tell, but it seems like, I'm not sure if the heat map is fully on track, but more usage is definitely seen during market hours, which totally makes sense. But yeah. Anyway, so that's what we got going for the week. A lot of great excitement around potential for rate cuts. That's going to definitely impact the market positively if that happens. A government shutdown or a discontinuation of the government shutdown, so government opening back up, would be good for the markets. And then, of course, there's the tariffs. So we're going to be watching those this week as well. George James says, when I was in Europe last 2 weeks, I realized the pre-market prices become available around 5 a.m. Eastern in Schwab. That's my indicator. Confer price action with Mercatus. Love it. I love that. Okay. So guys, a lot of great stuff here. Freddie and Angel. What's going on, Angel? NVTS wanted an update there. I've heard they got to deal with NVIDIA, so things are fairly going well pretty for NVTS. Their revenue has been increasing over the last quarter. And then Marty's here again. Marty says, oh, man, I came late. Did we cover CTM? No, we did not. More data center focused for today, but we can cover it tomorrow morning. Marty, if you're in the live session, I know you are in Stockmate. And Two Brothers says, hey, Will, can I get your thoughts on Redwire? Yes, I hold Redwire long term, and they're volatile in the short term right now. But they're a data center company that has a greater market cap, lower market cap than their overall assets that they have. So they're in a really good spot. So anyway, guys, I appreciate you all. I hope you have a great rest of your day. If you want to tune on into our daily live trading sessions, it's Stockmates, the second link in the description below. All you have to do to get our entries and our exits each morning, you just tune on into the session, get an email there. There's a good testimonial there from David. Look at that. He jumped his account up from what was it, 10,000 to 31,000 since joining Stockmates. That's a 200% return. He says, thank you for the community and all of the amazing results. We've had some great results, some testimonials that have really blown my mind. We're going to have some earnings coming out, big earnings this week. I was just over there talking with, these are some of our good testimonials, but I was talking with, I think it was Yoga here, and he dropped the exciting earnings for this week. So we got earnings coming out along with some targets by tomorrow morning. So when the companies are reporting, we drop those. So when companies are reporting, what time they're reporting, and the targets that we have. There's also, if we're looking for extra learning materials, there's like 70 plus lessons on technical and fundamental analysis. If you're trying to skip that though and just get to the emotional IQ and really how to have a plan, we do also have the no emotional side of things, the getting out of the FOMO or the pump and dumps and having a plan. So how do you actually create a plan? How do you actually learn how to invest and trade? Examples of a trading plan along with emotional IQ and much, much more, again, over in this book. I wrote it before ChatGPT, so if you want to grab it, and a free t-shirt. Daily live trading is happening in 11 hours, and I would love to see you there tomorrow morning. Thanks so much for tuning in. Again, it's the second link below. If you want to join us there, we got a government shutdown sale, and I'll see you guys in the next one. Make sure to hit the like button if I earned it. Do consider subscribing, and we'll see you guys next time. Thanks for tuning in. Take care. Oh, yep, definitely. Mark says, just join Lifetime Stockmates. How do we log in, get access to the morning live trading on YouTube? Mark, all you have to do, check your email about 15 minutes before market open. You get a link, and the link will give you access into the session. It's not like you're on YouTube, like it's going to be in your email. It's a private thing. You get the link for the live session about 15 minutes before the market opens, wherever that is for you. When I'm in California, it's 6:30 a.m. Here in Buenos Aires, it's actually 10:30 a.m. while we're here. So anyway, that's how you get access. So feel free to check the email. And also, I'm wearing the t-shirt here, free t-shirt. If you guys want this, I'll send it to you anywhere in the world. If you end up getting into Stockmates, all you have to do is just check your email and stuff and lock that in. Awesome, guys. Appreciate you all. Thanks for tuning in. Catch you in the next one. Bye for now.